Hello, welcome to the Quorum Forum. My name is Mike Berry. I'm a managing partner here at Quorum Private Wealth. Right now, markets are experiencing volatility over concerns that a recession is headed our way. The textbook definition of a recession are 2 consecutive quarters of a decline in U.S. gross domestic product, otherwise known as GDP. Recession is a normal and unavoidable part of any business cycle. But how shallow or severe a recession becomes generally determines the effects it'll have on us all. At Quorum, we look at 6 different indicators to determine the likelihood of a recession happening. We'd like to share those with you now. First, we look at yield curve inversion. Now, a normal yield curve would show short-term U.S. Treasury bonds with lower yields than long-term U.S. Treasury bonds. This indicator is flashing red. Back in April, and then again today on June 10th, we saw an inversion in the yield curve with yields on 5-year Treasury bonds posting higher yields than 30-year Treasury bonds. The second indicator we look at is consumer sentiment. This indicates how people are feeling about their financial stability. Inflation and war has had sentiment trending negative for a while, and even though there's been a slight improvement recently, as you see on this chart, we consider this indicator to be flashing red, predicting a possible recession. The third indicator is GDP growth or decline. The first quarter of 2022 showed a posting of gross domestic product declining 1.5%. So this is flashing red. And we'll be looking for the second quarter results after the end of June to see if the textbook definition of a recession is validated with another negative quarter of GDP growth, or if GDP can pull out a positive performance, perhaps we will avoid a recession. The fourth indicator we look at is the Fed model. Now, the New York Fed monitors the probability of a recession by looking at things such as building permits, productivity, and consumption data. This is currently flashing green, showing that a recession is not probable for the next 12 months. The fifth indicator is leading economic indicators. This is flashing green. LEI is pointing towards moderate growth in the U.S. economy, despite inflation and other crises around the globe. The sixth indicator is unemployment, and this is flashing bright green. We're at 3.6% unemployment in this country right now, and that's despite the highest number of people resigning from their jobs that we've ever seen in U.S. history. So, is a recession coming? Our indicators are split 50-50. The stock and bond markets are leaning towards the affirmative with recent declines, and in July, we'll see the second quarter GDP report. If it's negative, then we'll have confirmation of a recession. And even if it's positive, we feel that the market will remain volatile for the remainder of 2022. But there is a silver lining. Historically, recessions clear market excesses and set the stage for formidable returns for patient investors. We continue to keep a long-term view, we will stay diversified, we avoid market timing, and we'll always stick with high-quality investments. And as always, if you have any questions, please reach out to any one of us here at Quorum. Take care, and thank you very much for tuning in to the Quorum Forum.